Hey guys, I shared recently a couple of stats on current market conditions here in the southern New Jersey region, and I wanted to just give a quick explanation. If you're curious as to what's happening with residential real estate in southern New Jersey, particularly along the shore, then share a couple minutes with me. If it's not something that's of interest, then keep on scrolling, as they say. But I'm going to share my screen and dive right in. I shared this chart that I created yesterday on exactly what's happened in the second quarter with residential sales here in Atlantic County. This is Atlantic County broad, so this includes the seashore communities as well as the offshore, more primary resident type communities. And in addition, this is just residential one-family homes. Hey, Mary Ellen, long time no see. But yes, just residential one-family homes, not inclusive of commercial, multifamily land, anything like that. So we can see that the number of sales, no surprise, down 38% year over year. Closings in the second quarter. This is a little bit of a different data point than what I've been sharing the last couple of weeks, and I'll explain. But number of closings down 38%. Overall median sales price up 20%. Largest year-over-year quarterly gain we've seen since I've been tracking reports as thoroughly as I have, which has been over 10 years. But largest quarterly report up 20% year over year. Massive decline in terms of total listings on the market. So these are the charts that I've been sharing the last couple of weeks. If you've been following, you've seen, and we're updated here through the end of June. We can see that basically in the weeks that contracts were signed. So this chart is not closings. These are dates that contracts were signed. We can see that we had, for basically the first 8 weeks since the shutdown began, the market was down dramatically. Down over 60% the first couple of weeks, and then slowly moved into a more balanced market once we hit the end of May. Some sellers became a little more comfortable, some buyers became a little more comfortable with coming out looking at homes. And then by the time we moved into June now, we're seeing a reversal of that cycle where we're seeing a lot more contracts being signed in June. I've described this to some of my coworkers here and clients as well who are talking about the process as though basically we didn't lose many of the sales in late March and throughout April and even into May just for the first couple weeks. We essentially postponed a lot of them. So we moved a lot of sales that ordinarily would have taken place in the early spring, and we moved them into May, June, and now we're continuing that momentum into July. So that's essentially what we've seen happen. And now we're up the last week in June, we were up 58% year over year in terms of number of contracts signed. Again, it's not massive momentum, it's a replacement of contracts that would have been signed earlier in the spring. As we look into listings taken, this is what's leaving us with in an interesting place where we still have very, very low activity, or low inventory rather. We have high demand, very low inventory, which is what is feeding into the sharply appreciating prices, right? We can see that the number of listings taken, it also took a sharp decline, but we didn't see the same return to market like we did with the number of contracts signed for sales. We can see where sales have been up all through June, essentially, sharply, but when we move into listings, it's been a lot more modest. This is a national chart, and this kind of best explains it, where we can see the total listing inventory has continued to decline nationally, whereas the new listings have, once we hit our low level at the end of May, they've started to increase all the way through up, till last week. Basically, the best way to kind of explain this chart is that we're effectively seeing as quickly, it's almost like a store, right, where shelves are being consumed by shoppers faster than they're able to be restocked. The current listing inventory is being consumed or purchased by buyers faster than it's able to reload, and that's effectively leaving us in the place that we are right now, which is again very low inventory, and thus net bottom line is we're seeing big changes in terms of price. As we move into what's happening and where do we go from here, like what are we expecting to see in terms of price appreciation and growth as we move down the line, I think that the number, a good leading indicator is looking at what kind of activity we're seeing on current listings, and we can see again nationally and here in the Northeast, the number of homes that are being shown is up 20% year over year, just about. And I actually have another kind of local chart here where I'm showing New Jersey. This is Showing Time, the service that provides realtors the ability to manage the showings on their listings. Again, we can see that the number of showings are up almost 20% year over year here throughout the state of New Jersey. That is effectively the case in Atlantic County as well. We're seeing huge demand, but not as much inventory. But the inventory that is here, again, like shelves that are being stocked in the store, they're being shown and ultimately purchased as quickly as they're coming onto the market in most segments, right? Moving us down to this chart that I started with, again, high demand, right? Low inventory. We're seeing rising prices. Where do we go from here? Here's some projections that some national news sources have provided. MBA, Mortgage Bankers Association, National Association of Realtors, Zelman, Reuters, Freddie Mac, Fannie Mae, all indicating that their expectations in the next 12 months or calendar year or running year are going to be up year over year. A few sources, including CoreLogic, indicating that they believe prices may fall year over year. So much of that is going to be determined, I think, by some of the elements that we aren't quite sure of just yet, like exactly when we're going to come out of the COVID-19 shutdown and how we're going to come out of it, and what kind of shape the economy is going to be in as we move forward. The other real indicator, the other real answer that I like to look at is that, kind of like the old saying, real estate is location, location, location. So just like we're seeing in a lot of the major metro markets around the country, where the stresses on sales is felt a lot stronger. Higher urban density markets are seeing more people move out. Suburban communities are seeing more people and more demand moving in. Communities that have larger tracts of land, communities that offer or homes in areas that offer pools, outdoor spaces, home offices, or some of the hot trends in home search right now. So those are certainly indicators. But I think when we really dive down and look at like local market, that's effectively where we're going to see some changes from town to town. So I'm going to share my screen again, and I'm going to jump over to a little bit of a teaser. I just released this video a few minutes ago on Instagram and on Facebook. If you're not following and haven't seen, that's where I'll usually launch some things ahead of time. This particular chart is effectively just a copy of the one that you already saw. We see home prices up 20%, number of sales down for the second quarter, 38%. We have an inventory outlook that I did not explain, but as I move through it, I'll share a little more. As we move down, this is Atlantic County. I'm just going to show you a couple that I did already, one of which is this one for Linwood. We can see that Linwood actually bucked the trend a little bit, with overall sales up 17% year over year. Interesting dynamic. In addition, median sales price up 5.3, a little bit of a more modest gain in a pricey market like Linwood. Number of overall listings taken for the second quarter down 22%, so similar to some of the other markets. And we're indicating Linwood is also being a relatively balanced market when we look at the differences between a buyer's market or a seller's market, or here, like we're saying, a balanced market. So I'll give a quick explanation, right? Anytime we see an inventory where there are less than 5 to 6 homes or 5 months supply of inventory on the market at a time, we tend to indicate that is a seller's market. Seller's market. And the inventory is not keeping up with demand, kind of like where we're seeing in some of our markets here. When there is more like between 6 to 7 months supply, things are relatively balanced. Prices have a tendency to stay relatively stable. And when we move over 7 months supply, we tend to be in what we would identify more as a buyer's market. Prices may have a tendency to push back a little bit. So Linwood right now, very balanced. As we move into Northfield, we can see we're actually leaning a little bit more towards share my screen, a little bit more towards a seller's market in Northfield. Overall median sales price was up 8% year over year. We move into Summers Point, 4.5 months supply, right? Median sales price up 21% year over year. So we're seeing a very active high demand in Summers Point. And then finally, for this particular segment, Egg Harbor Township, again, strong seller's market, 4.2 month supply, prices up 9% year over year. So hopefully some of this information is helpful, and if you find this informative, I'm going to dive just as deep into every town that we work here in southern New Jersey. So any questions that you want to see, please don't hesitate to reach out. We look forward to the information that we provide being the most thorough and the most valuable market intelligence that you're seeing, so you can make the best decisions for yourself and your family. Shoot us a direct message, any questions. Otherwise, I look forward to seeing you real soon. Have a great day.